All right, let's talk about investing. If you've ever felt like it's some kind of complicated, exclusive club, well, consider this your official invitation. We're going to break it all down, nice and simple. So let me ask you something. What's your money doing right now? Is it just sitting there in a bank account? Because if it is, believe it or not, it might actually be losing a little bit of its power every single day, thanks to inflation. Investing is all about flipping that script. It's about making your money get up and work for you. Okay, so where do we start? You might think it's with stocks or charts, but nope. The real starting point for investing is you. It's not about chasing some hot tip you heard about. It's about building a really solid foundation for your own finances before you start putting any bricks on top. And this right here, these are the 3 crucial first steps. First step, get your financial life in order. Really know what's coming in and what's going out. Next, you got to define your why. What are you even investing for? A house? Retirement? Your goals are going to shape your whole strategy. And finally, number 3, you have to be honest with yourself about your investor profile. Are you someone who's okay with big swings for a chance at big growth? Or do you sleep better at night with a slow and steady approach? Seriously, answering these questions is probably the most important investment you can make. So, once you've done that personal homework, the whole world of investing suddenly looks a lot less intimidating. You can pretty much think of it like a map with 2 main continents, 2 big paths you can choose to explore. And here they are, those 2 big paths, fixed income and variable income. On one side, you've got fixed income. Think predictability, lower risk. You have a pretty good idea of what you're going to get back. It's kind of like you're lending out your money. Now, on the other side, you've got variable income. This is all about potential. The returns, totally uncertain. The risk, yeah, it's higher, but so is the chance for some serious growth. This is like becoming an owner, a partner in a business. So that's the big choice, right? Do you want to be a lender or do you want to be an owner? All right, let's dive into that first world on our map. Let's talk about fixed income. So what exactly is fixed income? Well, the key thing to remember is that you're basically lending your money to someone, a government, a company, and you have a clear agreement on how and when you'll get paid back, plus interest. That's why they call it fixed. It's that predictability. For a lot of folks who don't like a lot of risk, this is the bedrock of their whole strategy.
And what's the most common example? You've probably heard of them. Government bonds.
So a government bond, what is it really? It's pretty much exactly what it sounds like. You're loaning your money to the government so they can fund big projects. Stuff like building roads, schools, all that important infrastructure. And in return for your loan, the government pays you interest. It's generally seen as one of the safest investments out there, which is why it's often the stable core of a portfolio, especially for something like retirement. Okay, now let's cross the map and explore that other world, the one that tends to grab all the headlines, variable income. This is where things can get a lot more exciting and, yeah, a little more risky too. With variable income, forget about predictability. Any promise of a guaranteed return is right out the window. The value of your investment can shoot up or it can drop, sometimes in a big way. It all depends on things like the economy, how well a company is doing, or even just what people are feeling about the market. So, what's the trade-off for all that uncertainty? The potential for much, much higher growth. And the absolute classic example of variable income is, you guessed it, stocks.
So when you buy a stock, you're not just lending money anymore. You're actually buying a tiny, tiny piece of a company. You become a part owner, a shareholder. And if that company succeeds, the value of your little piece goes up. Think about it. If you own even 1 share of a huge tech company, you own a sliver of every single product they create and sell. You get to share in the rewards, but you also share in the risks.
Okay, so we've got these 2 very different worlds, right? The stable world of lending and the high potential world of owning, which brings us back to the most important question of all. Which path is the right one for you? And you know what? The answer is actually pretty simple. There's no secret best investment that works for everyone. The best strategy is always going to be personal. It brings us right back to those first steps we talked about. It all depends on your goals and how much risk you're comfortable with. A young person who has decades to save for retirement might lean more into variable income, while someone who's about to retire might want the safety of fixed income. It's all about you. So let's just do a super quick recap of the main points. First, always start with you, your financial health, your goals. Second, think of fixed income as being a lender. The goal is predictable returns. Third, variable income is like being an owner. You're chasing growth, and you accept the risks that come with it.
And finally, remember that your personal investor profile is your compass. It's what's going to guide every single decision you make.
So we've basically just laid out the map of the investment world for you. See, it's not some secret locked away club. It's just a landscape with different paths and different choices, and they're all open to you. So the real question isn't what is investing anymore. The real question is, now that you have the map, what's your first step going to be?